Welcome back, friends. As I had mentioned in my video presentation just 2 days back, the Indian stock markets will be on a roller coaster ride, will witness alternative days of rise and fall. So, day before yesterday, I did mention that before the closing, the markets would rise, and yesterday I mentioned that after the RBI policy, the markets would show up, which they did. They went up substantially after an initial pause. And today, the markets I had mentioned would fall again, and they have been on a significant decline. I believe that most of the day should be red. Um, Next week, we have another difficult time to take care. Monday should be a decent day, but Tuesday you can see expect significant declines in the stock markets, not only in India and Asia, but in other parts of the world as well. The RBI has not touched the interest rates. The repo rates have been left unchanged, and many economists felt that in an environment of a significantly declining economy, RBI should have done much more. Well, they have other measures as well, and hopefully they will be able to use them to the benefit of the bond market, and also to be able to work out the high inflation and low growth dichotomy that has begun to appear. 90 percentage, well, actually it's 60% of the Americans are not aware that their American Dow Jones and Nasdaq are at all-time highs. That means that they are not even aware why they've got nothing much to do with the stock market rally, and they seem to be at loss exactly as to what's going on. And if they are not aware that the markets are in all-time indices, that means they are not participating in the rally at all, and then therefore the wealth effect does not show up in the hands of the Americans. Now that's quite a revealing thing that yesterday's Financial Times Nielsen study has shown, and something that shows about how the American economy is reacting to the slowdown. A UBS study that has just been released says that the global economy will witness signs of growth in the second half of next year, 2020. I completely disagree. In fact, I think it's going to be the other way around. The second half of next year, 2020, will witness significant declines in the global economy and also in the stock markets. So be extremely careful. Do not get carried away. Be cautious. There are times which are bullish, like yesterday I said after the RBI policy the market can suddenly go up, and it did. So there are some good times, but do not be cautiously optimistic. Do realize that the deteriorating situations in the global economy have much further to go from here. And in this backdrop, you should wait for a suitable opportunity to be able to invest. Do not just go. I also believe that around Christmas time, you will see severe declines in global stock markets worldwide, and this could continue until the first week of 2020 January. So you are expecting something like a 10, 11, 12 days, and this declines will be very sharp, take people by catch people unawares, and definitely should be taken into consideration by investors, because people who want to invest for a medium to long haul should wait for this decline before they do invest. For traders, it would be an excellent opportunity to short the market around this time, and for people who are thinking of getting out, have to meet certain needs, they should get out much before Christmas 2000, and it's going to be a very difficult period around Christmas time to the first week of January 2020, and investors, please position yourselves accordingly. uh, there's a fund manager who says that if you put 10 lakhs today, you can multiply to 100 crores in some 25 years. Well, it's not so simple, because the premise is that you are going to double your money every 3 years, and you should be able to identify such stocks which are doubling in value every 3 years. Now, that's not such a simple proposition, friends. It is extremely difficult that you will be on the winning streak every 3 years, finding such stocks. What if you end up with dampener stocks, which can pull you down? And especially in a turbulent environment, in an environment where the chances of downside are more than the upside, and most global indices are already at very high levels, and the earnings are beginning to taper off, fall, growth is beginning to come down all over the world. This really will not make sense at this point of time, and please do not get carried away by such observations. And be careful as far as investing next week is concerned. Tuesday, remember, it's going to be a very tough day for stock markets in India and overseas. Thanks. Happy investing. Take care. Bye.